So today we are going to start with the dissolution. Any idea about dissolution? What is dissolution and all? So basically, it's about closing the business. So when you want to close the business, there's a procedure. It's not like we decided to close the business from tomorrow onwards. Okay, so whenever you want to close the business, there's a procedure. Okay, we have to file a chapter 11. What it called? Chapter 11. Chapter 11 in a court. So what is this chapter 11 means? When you file a chapter 11 for a closing process, so court will ask your balance sheet. What they'll ask? Your balance sheet they'll ask. So generally in the balance sheet, we have a liabilities and we have assets, right? We have what? Balance sheet. Under balance sheet, we have a liabilities and assets. Suppose you have here 4-5 balance sheet, 4-5 liabilities, and here 4-5 assets. So court is interested in this liability. Because see, when you are closing down your business, when you are dissolving your business, court is interested in a liability. What is the court concern is what about the liability holders? How much liabilities you have and how you are going to pay them. How much is the total liability and how you are going to pay them. That is their main concern. That is their main concern. Okay. So once you submit the balance sheet, they'll count all the liabilities and they'll check your assets also. And they'll basically court order you, start selling your assets and pay all your liabilities. All means what? When I'm saying all here in the dissolution, I'm talking about external liability. Under liability, we have 3 parts under liability. One is internal liability, second one is external liability, and third one is the reserves and funds. Okay, so external, internal, and reserves. 3 types of liability. So court is interested only in a external liability. They are asking to pay you external liability. Okay, so what is external liability and how we are going to differentiate between external liability? I'll just share you. Okay. So this is dissolution of the firm and liability. Under liability, if you see, there are 3 types of liability as I already mentioned: internal liability and external liability and reserves and funds. So court is interested in the external. See, I highlighted by yellow. External liability. And how we are going to differentiate between external and internal? Internal is what? Basically a capital balance of the partners, current account balances of the partner. These are what? Internal liabilities. Why it called as internal? Because it's between business and its owner. That's what called as an internal liability. And what is external liability means? Which is belongs to outsiders. For example, see over there, creditors. Creditors is what? Who the supplies goods for us. Bills payable, employee provident fund, bank overdraft, related party loan, bank loan, and unrecorded liabilities as well. So the liability which belongs to outsider, it called as an external liability, and that we have to pay before closing the business. Okay. So now, what is dissolution means? Why generally company dissolve? When they are suffering losses, right? When they are suffering losses from last 2-3 years, 4-5 years, then they decided to dissolve the business. So when they are suffering losses, they do not have the enough money to pay their liability holders. So what option left for them is what? To sell their assets and pay off the liabilities. This is the simple dissolution process. What is the process? To sell all your assets and get the money and start paying the external liability holders. Once you pay to the external liability holders, they will give you non-objection certificate. It's called as NOC. That all NOCs we need to collect and we need to submit to the court, and then court will give you the final NOC to close down the business. Okay, so external liabilities. And what about reserves? Now see, reserves not actually liability. Reserves what? The money which we kept aside for specific reason, right? Like asset replacement reserve, investment, workman compensation reserve, advertising suspense, or see now this general reserve fund. These are what? which we kept aside. It's our money only. So that is not actual liability, actual payable liability. So that we are not going to pay. Even internal liability also we are not going to pay unless we are finishing the external liabilities. Once you finish the external liability, if the money is left, then you can pay a internal liability. Clear? All the external liabilities we have to pay, and we have to get the NOCs from the external liability holders, and that NOCs we need to put in the court, we need to submit in the court, and then court will give the final NOC to close the business. Is it clear? Talking about external liabilities, it's compulsory to pay external liabilities. Okay, whether the information is given in the sum or not, we have to pay all our external liabilities before closing down the business. For example, we have suppose these 8 external liabilities in the sum, these 8 external liabilities, and we have the information about only 6 external liabilities, how much they paid to the external liabilities. Suppose they don't have the information about bills payable, and they don't have information about employee provident fund. They do not give any information in the sum. I'm saying, if they are not giving any information in the sum, still we have to pay the external liability holders. Similarly, as I mentioned, from where they'll get the money to pay off the liability, they start selling their assets, right? So fixed asset, we have to sell each and every fixed asset, whether the information is given in the sum or not given in the sum. Means, in a simple words, I'm saying, if the sum is given the information, then particular furniture we sold it for 10,000, sell it for 10,000. Okay, and if the sum is silent about any particular asset, for example, there's a machinery costing 30,000, and sum is silent about this machinery. Nothing is mentioned about machinery. So we have to sell that machinery for 30,000 because the book value of the machinery is 30,000. So we sell it for 30,000. Clear? All the external liabilities we have to pay, whether the information is given or not. And all fixed asset we have to sell. Fixed asset, I'm saying. Why I'm saying fixed asset now? Because see, there are some assets which we are not going to sell. For example, intangible assets like goodwill, patent, copyright, trademark, prepaid expenses, right? These are the assets we are not going to sell unless and until it is mentioned in the sum. Okay, but all fixed asset we have to sell, and all external liability we have to pay. Okay, so how to pay and what to pay, what is the process of paying liabilities is this. Generally, these accounts we open in the dissolution. First account is the realization account. Realization. What is the meaning of realization? Realization means what? We are releasing the money, or we are getting duty free from this particular business. We are getting free. That is called as realization. That's why we have realization account. And under realization account, what is the procedure? First, we record all the assets over here. All the assets over here under heading of to sundry asset. Okay, because we do not have the balance sheet in the dissolution, that's why we record all the assets in realization account on the debit side under the heading of to sundry asset. Okay, all, but there are 4 exceptions. What are the exceptions? Read this. Except partners loan, cash, bank, and reserves which we distribute. Okay, now what is this reserve which we distribute? I will explain you. But now just keep in mind these 4 things we are going to exclude while recording assets under realization. I'll repeat: partners loan, cash, bank, and reserves which we are going to distribute. These 4 things we exclude while recording the assets in the realization account. Similarly, all liabilities we record in the realization account credit side. All liabilities, again, there are 4 exceptions. Again, there are 4 exceptions. All other liabilities we are going to record under this by sundry liability heading. Okay. Now, which are the exceptions? Partners loan, capital account, reserve which we are going to distribute, and the bank overdraft. These 4 things we are going to exclude. Rest all the liabilities means creditors, bills payable, outstanding, employee provident fund, bank loan, related party loan, other liabilities we are going to record over here. Similarly, on the asset side, means on the left hand side, Under sundry assets, we record all the assets like furniture, machinery, equipment, building, land, all assets except these four. Okay, and once you record this assets and liabilities, actual relation accounts start. And what is the rule of relation account that I mentioned in the highlighted over here? All the payments, expenses, and losses. What I said, payment, expenses, and losses, we are going to record on the debit side. We are going to record on the debit side. All payments, expenses, and losses, we are going to record on the debit side. All payments for what? Payment of liabilities, expenses of a dissolution, and any losses that we are going to record on the debit side, left hand side. Okay, and right hand side is what? All receipts. Receipt means what? As I mentioned, when we are going to dissolve the business, we are going to sell our asset. So when we are selling our asset, we start getting the money, right? So when you're getting the money, it's called as a receipt. So all receipts we are going to record on the credit side of the relation account, and incomes as well as the gains. Clear? All expenses on the left hand side and all incomes on the right hand side. Okay. Rule we follow here is what? A simple nominal account rule. What's the rule of nominal account? Debit expenses and losses, credit incomes and gains. Simple rule. Debit expenses and losses, credit incomes and gains. Okay. Similarly, payments on the debit side, receipts on the credit side. Clear? Then second account is the partners capital account that we are doing it from the last 4-5 chapters. Fundamental, admission, retirement, death. Same rule here also applicable. What is the rule of the partners capital account? If you want to decrease the capital balance, it comes on the debit side. Decrease the capital balance. And if you want to increase the capital balance, it comes on the credit side. Decrease capital balance is debit, increase capital balance is credit. Okay, and see what I excluded from here now. We exclude means what? We are not going to ignore that balances. We are going to record somewhere else. Okay, so you see, first of all, here I recorded the partner's loan. Under asset, I recorded the partner's loan. So if I exclude it from here, where we are going to record it? Here. Partner's loan on the asset side. Okay, and assets taken over by partner comes on the debit side. Liability paid over by the partner comes on the credit side. Okay, logically also, if you're thinking, assets taken over by partner means what? When partner taking over one asset of the business, he owe to business. So business will reduce his capital, right? They'll take out from his capital balance. That's why it's coming on the debit side. Because the rule of the capital account is what? If you want to decrease the capital, comes on the debit side. So he's taking over the asset means what? He owes to business. So business will take out the money from his capital. That's what comes on the debit side logically. Credit side, what I said, liability paid off by partner. So one of the liability of the business paid by the partner, but he'll ask that money back. It's your liability. It's a firm's liability. I paid it from my own pocket. Give my money back. So in that case, it will increase his capital. That's why it comes on the credit side. Okay. So partner's loan excluded from here, and I recorded over here. Now, what about this cash and bank? I excluded from here. I'll record here in the third account. See here. To balance brought down. This is for basically a bank balance. When you have a bank account, bank balance will go to the bank account, but obvious. And what excluded is the third one is a cash. Cash will record in the bank account itself to cash. Okay. Now, see here, from here I excluded the bank overdraft. So when I'm going to record the bank overdraft here as by balance brought down in the bank. What I excluded from the liability side, capital account, that I'm going to record in the capital account by balance brought down. Partner's loan excluded from the year, that I'm going to record here, partner's loan liability side. Okay, so we excluded means what? We are not ignoring that items. We are going to record somewhere else, but we exclude from here. Okay. Now, third one is the bank account. Bank account rule is what? Simple. It's a real account rule. Debit what comes in, credit what goes out. What is coming in, what is going out. If it is coming in, left hand side. If it is going out, right hand side. Debit what comes in, credit what goes out. That's why I mentioned in the highlighted, see yellow highlighted, all receipts on the debit side and all payments on the credit side. Money is coming in, debit, money is going out, credit. Right? Now, points to remember. All external liabilities has to pay irrespective of the information that we already discussed, right? All external liabilities we have to pay compulsory. All intangible asset should be, sorry, all tangible assets should be sold. All tangible asset we have to sell irrespective of the information again. Bank overdraft will be recorded in the bank account credit side. We open external liability account when liability holder is taking over more than one asset. This particular rule we will explain in the later on session. When we open an extra account, generally that also we'll discuss later on. Debtors balance will be recorded gross figure. That I'll tell you while doing the sum what is gross figure means. If the firm is paying any remuneration to the partner for dissolution process, then he has to bear litigation expenses. This is very important point. What happens sometimes if when you want to dissolve the business, and suppose there are three partners A, B, C. Okay, so we appointed A. We actually approached to A and saying, "Ki, help us to do a business." Business approach to A and saying, "Ki, we are appointing you as a dissolution processor of the dissolution. You just help us to dissolve the business, try to sell the assets as soon as possible and pay the liability." Okay, so for that we allow him some remuneration, means kind of a salary. And once we pay a salary to a partner for dissolution process, so any dissolution expenses come, he has to bear from his own pocket. Clear? This is the sum. First, I'll read the sum. Black and white were partners sharing profits in 2/3 and 1/3. So it means basically 2:1 is the ratio. On 31st March 21, they decided to dissolve their business when their balance sheet was as under. This is the balance sheet given, and they decided to dissolve the business. There are two partners. The ratio is 2:1. Under liability side, we have creditors, journalism, and capital, and asset side, we have plant, furniture, and all this. So many assets are given over there. And in the relation shows the following reserves. There are some adjustments also given for the dissolution. Prepare relation account, partners capital account, and the bank account they ask. Generally, these three accounts they ask. So I prepared already all your relation account, and this is partners capital account and bank account. Okay, can we start? As per the discussion, what we are going to record over here on the debit side of the relation account, first we record here all assets under the heading of two sundry assets. Okay, all assets. There are some exceptions also that we already discussed. Okay, so which assets we are going to record over here? See, plant and machinery we record, yes. Furniture, yes. Stock, yes. Debtors, yes. But cash we don't know. Cash we don't record over here. Cash we record somewhere else. So I'll record one by one. Plant and machinery, 25,000. Without checking any adjustments, directly record it. Sometimes we have to check the adjustment also, but this is the basic sum. No need to check any adjustment. Just record it as it is, what is provided in the sum, without checking any adjustment. Debtors balance is 20,000. Okay, cash we are not going to record over here. Cash we are going to record in the bank. Okay, as we already discussed in the rule. Two balance brought down. What is the cash balance given to us? 10,000. Debit side of the bank. Right? All assets are done. So I'll do this total and I'll put it 25 plus 4 plus 10 plus 20 is 59,000. Assets are recorded on the debit side. Now I'll record liabilities by sundry liabilities. Okay. So creditors, yes, we are going to record because it's an external liability. Creditors. Okay. 15,000. Just check. Next is a general reserve. General reserve is an external liability? No, it's a reserve, right? What we are going to do with that reserve? We are going to distribute. How we are going to distribute between partners in admission, retirement, death? Here also we are going to distribute the general reserve between partners. Okay, so that is not coming over here. That's it. Only one liability we have, so I can put it out 15,000. Okay, because we exclude from here the capital and the reserves also, right? So exclude from here. So where I'm going to record that capital, I'll record in the capital account by balance brought down. Check what are the capital balances provided to us, 25 and 20. So 25 and 20. And then by general reserve as well. Why on the credit side? Because it is given on the liability side, right? When it is given on the liability side, it go on the credit side, correct? The capital account. 9,000 in the ratio of 2:1, right? 2:1 is the ratio given, 9,000. If I split 9,000 in 2:1, I'll get 6,000 and 3,000. The whole balance sheet is completed. Assets and liabilities are recorded as per the rule. Okay, whatever we exclude, we excluded, and whatever we are allowed to record in the relation account, that I recorded. Now check the adjustments. Black took over the plant and machinery and furniture at a book value less than %. Black took over it. Okay, so when Black is taking over means basically what? His firm is selling this assets to this Black. So firm is selling. So when the firm is selling, it's a receipt of payment for the business. Definitely it's a receipt, because when I'm selling the assets, the firm will get the money, right? So receipts we are going to record on the credit side of relation account as per the rule, right? So I'm going to record here on the credit side, buy. What I'm going to write over here? Who took that assets? Any name is given? Yes, the name is given it to us. Who took it? Black took it. So let Black name. Black's capital. What he took it? Plant. And he took the furniture also. Right? Plant. What is the plant value given it to us? 25,000. Right? 25,000. And what they said? 10% less. Right? 10% less. So 25,000 minus 10%, that comes to 22,500. Right? He took the furniture also. Furniture ka value was given as 4,000. Again 10% less means 3,600. Now I'll do the total and put it out. 22,500 plus 3,600. 26,100. Okay, he took over it. And since it is a receipt, I recorded on the credit side. So if I recorded here by B's capital account, then it will go to the which account? Definitely to the B's capital account, right? So here I credited. Here I credited. So when I credited over here, it will go on the debit side of B's capital account. Why? Because the rule of one account to other account will go on the opposite side always. What is the amount? 26,100. Okay, if I credited over here, that's why I'm debiting in the partner's capital account. And why in the partner's capital account? Because I wrote there by B's capital account, so it will go to the B's capital. Next, after that they say White took over the stock and goodwill. White took over the stock. So while again stock and goodwill is an asset, so when assets taking over by the partner, again it's a receipt for us, right? So again I'll record on the credit side only. Now this time White taking over, so I'll write by White's capital account. Okay, what is taking over? Stock and goodwill. Okay, stock and goodwill. Okay, both together he's taking over for 17,500. Directly I'll write 17,500. Okay, now the question is in your mind. So goodwill is not there only in the sundry assets, and they're saying they sold it. When they're saying when they're mentioning in the sum they sold it, so you sell it. Don't think about it. If the assets was not present, still we are selling it, this, that, nothing. In the dissolution, it's not a going concern. So we are not going to check the accounts later on. So what are the informations given in the adjustment? Just do it without taking into consideration what is the profit, what is the loss, this, that. See here, I suffered a loss. Plant 25,000 ka 22,500, 4,000 ka 3,600. There were some losses, and I'm not considering that losses at all because dissolution is not a going concern. Similarly, any asset they say they are saying we sold it. Asset is not present in the balance sheet, but they are telling us to sell it. Sell it. Okay. Don't question to the sum queue why this goodwill is not given in the sum and still we are selling it. Doesn't matter. They said, we sell it. Okay. They said why White. Then we'll go to the White's capital account because I credited over here. It'll go on the debit side. So I can write in the same line 17,500 because I already wrote here two relations. So I can write in the same. I credited over there. That's why I debited. Next, Later on, they say sundry debtors realized. Realized means what? We sold it. So asset realized is again income, because when we are selling the asset, we are getting money. So it's again income. So I'll record on the credit side. Now, who any name is given? Black, white? No name is given. So then when the no name is given, we say through bank. That's why I'm writing here by bank. Means the money which you are getting, that will transfer to bank account. So when the name is mentioned, we'll write the name. If the name is not mentioned, we'll write by bank. Okay. By bank. What is it? Debtors. So I'll write here debtors 18,500. Okay. So since I recorded here by bank, then but obviously go to the bank account, right? Because when I wrote by black, then I recorded in the black account. When I wrote by W, then I recorded in the W's account. Now when I'm recording by bank, it will go to the bank account. Again, I credited over here. So it'll go on the bank account debit side to realization account. How much? 18,500. Correct. Now, syndicators were settled at a discount of 5%. Settle means what? We made the payment with them. How we made the payment? After getting a 5% discount. Payment I'm saying now. Because settle means what? Creditors, we need to pay now. We paid them. We paid them. How we paid them? At 5% discount. Paid. Paid means payment. Payment comes on the which side? Payment comes on the debit side. Right? So who paid it? No name is given. Again through bank. The name is given. I'll write name. If the name is not given, I'll write bank. Okay. Creditors. How much creditors? Creditors value was 15,000. 15,000. This is 5% discount. So 15,000 minus 5%. Just check it. 15,000 minus 5%. That comes to 14,250. Okay. Any other payments we have? Okay. So before closing, okay. So before closing, we need to check all the liabilities we paid on loan. Okay. And all the fixed asset we sold on loan. See, we have only one liability over here. I'll just change the paint colors, we'll understand better way. We have only one liability that we paid it over here. Done. Fixed asset, plant and machinery. Yes, plant and machinery is done. Furniture is also fixed asset. That is also done. Stock is fixed asset. That is also done. Debtors also done. So all the assets are done. Even all the liabilities also done. Now we are free to close. So before that, we need to close this 14,250. I'll put it out. And since I recorded here to bank, we'll go to the bank account. And I debited over here, we'll go to the bank account credit side by a realization account. 14,250. Okay. That's it. Now I'll close the account. Same logic. First, we'll check the heavier side. Which is the heavier side? I need to see that which is the heavier side. I'll just do the total of both the side and I'll check it. 59,000 plus 14,250. So debit side I'm getting 73,250. And I'll check for the credit also. 15,000, 26,100 plus 17,500 plus 18,500. 77,100. So it means credit side is a heavier. So I'll write 77,100, 77,100. And from this, I'll subtract this 73,250 to get the profit. 3850. 3850 is the profit we made. Why I'm saying profit? What is the reason why I'm saying profit? Because you are saying this is the income side. Income side is greater than the expenses side or payment side. That's why it's a profit. That I distribute between black and white according to their profit sharing ratio, which is 2:1. 3850 in 2:1. They're getting a decimal 1283 and 252567. This is the distribution. Since I got on the debit side, now I got on the credit side of partners capital account. Here by a realization account 2567 and the other one is 1283. 1283. Right? And I close the partner's capital account. So 25,000 plus 6,000 plus 2567 is 33,567. 33,567. From this, I'll subtract this 26,100. Then I got 7467. Similarly, I'll close for this also. 24,283. 24,283. From this, I'll subtract the 17,500. Then I'll get 6783. That I'm going to record. Okay. Now, generally, we used to write her two balance character. But since it's not a going concern, there's no carried on, no brought down. So we need to finish it. Finish it what? By paying them. So when I'm paying them, what I'll write? To bank. Since I got on the debit side over here, I'll go on the credit side. By B and by W. Capital account. Okay. So 7467 and 6783. And this account has to balance. This account has to balance. Yes, 28,500. This is the process of dissolution. All the assets and all the liabilities we paid and we close the accounts. And eventually, at the end, your bank account has to balance. When if it is balanced, it means everything is correct. If it is not balancing, it means something is wrong. We need to check it. Okay. I hope everyone understood. Thank you.